In this video, I'm going to show you how to lower your risk and earn more each year, regardless of how the economy is doing. I will share with you the big secret to achieving financial success. But first, I'd like to quickly recap what I covered in the last two videos. In the first video, I talked about how I used to invest in bonds, term deposits, mutual funds, index funds, and ETFs, just like everyone else. And after 10 years, I had nothing to show for it. My investments showed very little growth, no real income growth, and I had paid thousands of dollars in fees. I realized that this traditional method of investing was never going to give me financial freedom. There had to be a better way. I spent 3 years researching the best successful investors, learning their methods because I didn't want to reinvent the wheel for myself. Now, everything I learned from these successful investors, plus my more than 20 years of experience as a dividend investor, I put into my Simply Investing blueprint. My step-by-step guide will show you how to invest, earn more, save time, reduce your risk, and put you on the road to financial success. In the second video, I covered the basics of investing. What is a stock? What is a dividend? And what is the stock market? You learned that a stock represents ownership in a company. And as part owner of a company, you're entitled to share in the profits of the company. The profits come to you in the form of dividends. In case you haven't watched the first two videos yet, make sure you do that right now, because I provide you with practical information to help you on your way to financial success. As you can see in this example, if the company is paying out $1 a dividend per share per year, and you own 1,000 shares, you will receive $1,000 every year for as long as you own those shares and as long as the company continues to pay the $1 dividend. The dividends are deposited directly into your trading account as cash. The dividends are yours to keep. You can reinvest them or spend them if you wish. Now, I'm excited to share with you the big secret to achieving financial success. The key is to invest in companies that consistently grow their dividends. Each time a company increases its dividend, it puts more money in your pocket, and you don't have to do any extra work or invest more money. Dividends are truly passive income. Let me show you the power of increasing dividends using my personal example. But before I do, I need to quickly explain dividend yield. The dividend yield is simply the annual dividend divided by the share price. For example, if a company is paying a dividend of $1 and the share price today is $20, the dividend yield is then going to be 5%. The 5% represents the return on your investment while you hold on to your shares. For example, if you invested $10,000 in a company with a dividend yield of 5%, you would receive $500 in dividends each year. Now let me show you the power of increasing dividends using my personal example with buying shares in TC Energy. In 2000, I purchased 185 shares in TC Energy at $13.40 each for a total investment of $2,479. You can see that at the time, the dividend was 80 cents a share. I still currently own this stock, and each year TC Energy has increased their dividend. The most recent dividend is $3.48. Remember, my initial investment was $2,479, and so far I have received over $7,377 in dividends alone from this one company. And the annual return on my investment today is over 25%, which should be even higher next year if the company continues to increase its dividend. Not only does an increasing dividend put more money in your pocket, but every increase also reduces your risk. The stock today is trading at around $65. Do I care if the price drops to $40, $30, or even $20? Not at all. I have already recouped my initial investment 3 times over. As I said before, the key is to invest in companies that consistently grow their dividends. Take a look at this table on the screen. Some of these companies have been paying dividends for more than 100 years. And more importantly, all of them have been consecutively increasing dividends for more than 40 years. Think about how many recessions and market downturns we've had in the last 40 years. Yet companies like these continue to increase their dividends. No one can predict the future. Stock markets and stock prices go up and down all the time. But when you see a table like this, you can have a high degree of confidence that companies like these will continue to not only pay a dividend next year, but also hopefully increase their dividend, which means more money in your pocket. Now, when it comes to dividends, there is one question that I always get. What happens to the dividend if the stock price drops? On this graph, you can see Coca-Cola's stock price from the last 20 years. Notice that the stock price goes up and down, in some cases dropping by more than $5, $10, $15. But what happens to the dividend, represented by the orange line? The dividend keeps going up, even when the stock price drops. In fact, Coca-Cola has had more than 57 years of consecutive dividend increases. How can a company keep increasing its dividend when its stock price drops? Because dividends are not paid from the stock price. Dividends are paid from earnings. As long as a company is profitable, it can continue to pay dividends. I'd like to share with you 3 more benefits of investing in dividend stocks. Dividends provide you with an immediate return on your investment. Without dividends, you're only hoping for the share price to go up. Hope will not cover your living expenses. Dividends provide you with immediate cash in your pocket. You can spend the money if you wish, or reinvest it into other dividend-paying stocks. Once given out, dividends cannot be taken back. So if a company does poorly, or in the worst case, goes bankrupt, the dividends you've received over the years are yours to keep. Without dividends, you'd be left with nothing. Does this mean you should go out and buy dividend stocks right away? Not so fast. In addition to looking for dividends, you want to make sure that the company has low debt, has a history of profitability, is recession-proof, and check for a few other things, which I will cover in my next video in the 12 rules of Simply Investing. In just over a week or so, I'm going to be launching my Simply Investing Premium Bundle, where I cover all this material. I'll also give you the step-by-step blueprint to financial success. I'm only going to take a handful of new students and teach them my Simply Investing course blueprint. You will learn how to achieve financial success, to no longer waste your hard-earned money on fees, how to generate growing passive income each year, that investing is not like gambling, it isn't complicated or time-consuming, and you can earn passive income even during a recession. You will no longer have to guess how to invest. I'd like to help everyone, but I find we get the best results when I work with a small group. That way, I can provide all the help and support you really need. So if you're interested, make sure you click on the link under this video and put your name on the early bird waitlist. Everyone on the early bird waitlist will get access to the registration page the night before the premium package launches to the public on February 28th. I hope you enjoyed this video. If you have any questions, send me an email and I'm more than happy to help out. Stay tuned for the next video where I will cover the 12 rules of Simply Investing and show you how to find quality companies to invest in for long-term growth. I'll see you there.